The Nasdaq 100 ran into key resistance this week, hitting a high of 14,299 on Monday before coming off. I quoted 14,280 as solid resistance, being the trend line that you see here in black. As that trend line is rising, each day that it hits that area, the resistance level is gradually increasing. Price has tested that trend line on 3 out of 5 trading sessions this week, showing us how important that area is, with the latest test on Thursday firmly being rejected. Now I'll reiterate what I said in my last video, which is that the bulls need to break above this area for the bounce back to continue. On Friday, price hit the 13,720 support level, which was set up by the low formed on the 24th of January this year. This area is important because if price breaks below, we're looking at 13,505, followed by another slump towards 13k. So far on this chart, we've had 2 confirmed breakdowns, and this is the latest area where price is held, looking to set up a 3rd breakdown. The Nasdaq 100 confirmed its first breakdown on the 4th of January, making a lower high and breaking the key trend line here in green. Price then fell, making a low of 13,720 on the 24th of January before bouncing. The second breakdown was confirmed on the 20th of January when price tagged the 200-day moving average. After that, you've had moving averages acting as resistance, with price selling off at each retest. First, the 40-day moving average in blue acting as resistance, followed by the 20-day acting as resistance here in pink. Price continues to be technically driven, with signs of a potential 3rd breakdown if bulls cannot get above this key resistance area. As always, know your levels and have a plan around them so that you're not caught out, especially by headline driven movements. For now, the levels are clear. On the downside, 13,720, 13,505 and 13k. And on the upside, around 13,400 to 440, with bulls needing a clean break for that price to squeeze higher. I also wanted to cover the euro dollar in this week's video. The reason being, if we have a look at this weekly chart, the euro dollar lost a key support level this week. The 111 handle, which held last week and was the level price broke out of in June 2020 before a new uptrend began. The low of the week, 108.85, will now act as immediate support. However, there is a risk of a flash crash towards the 107, 107.10 area. There is every possibility this could come if investors continue to panic buy the USD next week. If we did get to 107, I'd expect a sharp snapback rally at this point, with the euro dollar considerably oversold. The other scenario is that the 108.85 does hold into next week and that 111 level being targeted. Price often goes back over old ground to test a breakout, confirming them as either support or resistance. In this case, the retest of 111 would be a test to confirm as resistance. Now, you could argue the euro dollar has just played out a head and shoulders pattern, which I've drawn out here, with the top of the head being the high around 123.10 and the neckline around 116, which would provide a downside target of 108.90. The low of this week, 108.85. Could it be that we've seen the low in the euro dollar as a result of this head and shoulders pattern playing out? Another thing to point out is that there is also a gap down from last week at 112.74, which, if sentiment did begin to change and price got back above that 111 level, this area would become the target. But for now, the bears remain in control and 107.10 remains a real possibility. Know your levels and make a plan around both scenarios. As always, if you'd like to learn more about technical analysis and how I come up with the levels along with my trade plans, come and join the trading community at Level Traders. You can take the 2-week free trial and join in with the live trading chat room and my daily blog where you can find levels and thoughts daily. With that said, for those that are getting value out of these videos, remember to hit that subscribe button so you don't miss future content, and I'll see you at the next one.